Amazon spent years losing money, and that was the plan for nearly 2 decades. Jeff Bezos sat in front of shareholders and analysts who were convinced he was leading a sinking ship. To the traditional financial world, Amazon was a reckless experiment that prioritized growth over the very thing a business is supposed to produce, profit. But the red ink on the balance sheet wasn't a sign of failure. It was a weapon. It was the cost of building a machine so large that once it finally turned on, no one else would be able to compete. To understand how Amazon conquered the global market, we have to look past the quarterly losses and into the logic of a predator. Act 1. The confusion. In the late 90s and early 2000s, the media narrative around Amazon was one of skepticism bordering on mockery. Journalists and economists looked at a company that was selling books and electronics at razor-thin margins or even at a loss and concluded it was a house of cards. They saw a company that was bleeding cash while its stock price soared, a phenomenon they labeled Amazon bomb. The confusion stemmed from a fundamental misunderstanding of what Amazon was building. People thought they were looking at a retailer. In reality, they were looking at an infrastructure company that happened to sell products to fund its own expansion. Image: a vintage 1999 magazine cover, featuring Amazon.bomb or a skeptical headline about Bezos. This leads us to the strategy, the flywheel of aggressive reinvestment. Bezos realized that in the digital age, scale isn't just an advantage, it's the only defense. Every dollar Amazon made was immediately plowed back into the company. Instead of giving dividends to shareholders, they built massive fulfillment centers, they invested in a global logistics fleet, they poured billions into a cloud computing experiment called Oz before the world even knew what the cloud was. By intentionally keeping their net income near zero, they avoided taxes and outspent every competitor who was forced to prioritize short-term profits. This was a strategy of scale dominance. By operating at a loss, Amazon could offer prices so low that local bookstores and retail giants alike were starved of oxygen. They didn't just compete with the market, they moved the market onto their own territory. By the time a competitor realized Amazon was a threat, Amazon already owned the warehouses, the delivery vans, and the server farms. They didn't just win the game, they bought the stadium and charged everyone else rent to play in it. This transition from a store to a platform was the ultimate move in infrastructure control. Image: the Amazon flywheel diagram showing the cycle of lower prices, more customers, more sellers, and more growth. The payoff for this decades-long patience is a level of market gravity that is unprecedented. Today, Amazon doesn't have to worry about losing money on a single shipping box because they own the entire ecosystem. They have reached a point where their losses were actually the greatest investment in history, because they were willing to wait while others demanded immediate returns. They now control the digital rails of the internet through Oz, and the physical rails of commerce through Prime. The payoff isn't just about being the biggest store, it's about being unavoidable. Amazon has reached a state of monopoly inertia, where their dominance in one sector like shipping allows them to subsidize their entry into another like healthcare or film production. The competitors who were profitable in 2005 are mostly gone, or struggling to keep up with the logistics network that Amazon built. While the world was laughing at their losses, patience didn't just help Amazon survive, it allowed them to wait for the rest of the world to become dependent on them. Image: a comparison chart of Amazon's net income versus operating cash flow over 20 years, showing the diverging lines as we look at the modern landscape. The realization is quiet but profound. We aren't just customers of a website, we are residents of an ecosystem. The losses were the entry fee to a future where Amazon is the default setting for human consumption. They proved that in a winner-take-all economy, the company that can go the longest without a profit is the company that eventually owns everything. The red ink has long since turned to black, but the strategy hasn't changed. Amazon is still reinvesting, still scaling, and still looking 20 years ahead. The loss was never a mistake. It was the most successful disguise in the history of business.